Welcome to Sales, Tax, and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, I'm Mike Fleming, founder of Sales, Tax, and More, and today's co-host of the Sales, Tax, and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. Today, my co-host Ellie and I are going to do something a little bit different. We get a lot of questions, and some of them are very frequent. So we thought that we'd take this episode and the next to go over some of those most frequently asked questions. There are 14 in total. Today, we're going to cover the first 6, and we will do the next 8 in the next episode. But before we get into these questions, I would like to introduce you to my co-host, Ellie Moffat.
Hey everyone, Mike, I'm really excited for today's episode. We have tried to jam pack it with really helpful information for everyone, but I do want to do a quick introduction for Sales, Tax, and More. Sales, Tax, and More is a full-service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling any of your state tax-related needs. So we do a lot of sales tax returns, sales tax registration, sales tax audits, consulting, research, and like our name states, more. So if you have questions about our services, please reach out and ask. We will give you plenty of ways to do so. And I do want to just touch on one more housekeeping thing for today. We're not going to do the classic interview style. Mike and I will be reading questions and then giving you those answers, so it's a little bit easier to follow. And with that, Mike, let's get started.
Okay, thanks, Ellie. And our first question is, and this is the biggest question, do I need to register for sales tax? I mean, we have lots of clients and potential clients who are calling in wanting to know when, where, how they need to get registered. So the first question is, do I need to register for sales tax? And Ellie, as always, my answer is it depends. 4 main reasons or 4 main issues we have to look at when deciding if you need to register for sales tax or not. And the first one is nexus, and nexus, just a fancy word, means link or connection. So do you have some sort of link or connection with a state where the state could require you to go ahead and get registered to collect and remit sales tax? And this link, it can be physical, it could be based upon having property in a state. That could be real property, could be tangible personal property, could be inventory. So inventory that's stored or consigned, or it could, be based on having independent contractors or subcontractors travel into a state on your behalf, or employees traveling. So lots and lots of different types of activities can create this nexus. But nowadays, since the Wayfair case, it can also be based on just having sales into a state. Some states have a 200 transaction threshold. Other states have just a dollar threshold, could be $100,000, could be $250,000. So lots of ways to create this link or connection we call nexus. If you have nexus, now you got to determine if what you sell is taxable. And one area that we see a lot of mistakes being made is digital products and services, because a lot of people say, hey, if I'm selling a widget, widgets are generally going to be taxable. But, if I have a digital widget, or if I'm selling services, a lot of people just assume they're not taxable, and that is just not the case anymore. I mean, taxability rules are changing all of the time, and every year we see more and more states taxing more and more services. So first thing we look at is, do you have nexus? Second thing we look at is what you're selling taxable. If it's not taxable, most of our clients are going to decide not to get registered, but you got to make sure that it truly isn't taxable and it's just not your opinion. All right. So the third thing we look at is materiality. And by the way, this is what I believe. This is not what the states believe. The states think that, hey, once you have nexus, dollar number one, you should be collecting tax. I think we need to use common sense. I mean, 200 transactions is a pretty low threshold. If you're selling a $5 item, that's $1,000 in sales. Does it make common sense to go ahead and jump through all of these hoops that the state says that you should? I mean, you'd be better off waiting for a state to track you down. Because, it's actually cheaper to pay the state out of your own pocket plus penalty and interest rather than jumping through the hoops of getting registered and then having to collect and remit the tax, file the sales tax returns. So I think we have to use common sense and only get registered when the exposure is material. And if it is material, I would think that you want to get registered sooner rather than later. You don't want the liability to continue growing. But you don't want to get registered too early either when your sales are not material. And the last thing is you got to be responsible. I mean, if you're only selling on Amazon or some other marketplaces or a bunch of marketplaces, at this point, the vast majority is only 3 states that do not require the marketplaces themselves to collect the tax. If you're only selling at a marketplace, then you don't need to be registered because once a marketplace begins to collecting the tax, it's viewed as their sale and not your sale for sales tax purposes. So no need to get registered. If you're already registered and only selling in a marketplace, most of our clients are deregistering at this point. So Ellie, those are the 4 things. Do I have this link or connection called nexus with the state? Is what I'm selling taxable, and services are taxable in many places? Is my exposure material? And then again, am I actually responsible for collecting and remitting the tax, or is someone else responsible for it? So if you can answer yes to all 4 of those issues, then yes, you should get registered. If you can answer no to any one of those questions, you can wait.
Mike, I want you to say digital widget 10 times fast.
Digital widget, digital widget, digital widget.
Yeah, Mike, you kind of already touched base on this, but the second question that we get a lot is, what is Nexus? And, when I first started working at Sales Tax and More, I remember Googling sales tax nexus, and it gave an incorrect definition. And I brought it to a meeting and was quickly corrected. And hopefully I'm on the right course now. So yeah, a lot of confusion around the definition of nexus, and we did already touch on it, but like Mike said, it's a fancy word that means link or connection. In tax, it's a link or connection that must be present before a state can require you to do anything like collect or pay tax. This link or connection can be physical or economic. Economic just means selling into a state can create nexus. Physical can be created by owning or leasing property in a state, having employees in a state, and what some people find kind of surprising is even utilizing independent or subcontractors. So hopefully this is in your head now. I know Mike touched on it, now I'm touching on it, and we'll probably continue to do so. So there you go. There's your definition of nexus, Mike.
And Ellie, you did a great job. We're not going to give you a hard time here. So you've come a long way, and yes, you're square on. You hit the nail on the head here. So, all right. So the next one we hear again relates to this. What's the worst type of nexus? And I was going to use an analogy, but I know Ellie will get mad at me if I use that analogy. So
I mean, trouble.
I get myself in trouble all the time. If a state finds out that you have nexus, it doesn't matter what type of nexus it is. So when we say what's the worst type of nexus, generally, I think it's those types of nexus that you're not aware of. It's anything that you didn't know could create nexus, in my opinion, is actually what the worst type of nexus is. And right now we have, in a recent survey done by Avalara, they say that 1 out of 2 people are not compliant for economic nexus. This is the newest type of nexus we have. It's only, 2.5 years old. But it's 2.5 years old. You would think we would have better compliance, and the states are going to be coming out very aggressive as we start getting back to work, coming out of these pandemic related shutdowns. So economic nexus, very, very important. It's very new. Some companies don't even realize they have exposure at this time. So, we've got a sales force here. They're reaching out to people. They're even reaching out to different accountants, and people are just not aware of this. So economic nexus, big issue. As Ellie was saying, it can be created by just having sales into a state. And that's a huge change. I mean, everyone for years has been saying, well, you have to have some sort of physical presence. Well, the U.S. Supreme Court threw that out in the, South Dakota versus Wayfair case. So economic nexus, perhaps one of the biggest out there, if you want to call that worst. Okay. A lot of people aren't aware of it. So economic nexus, number one. I'd say third party nexus is number two. And, third party nexus, it just doesn't make common sense. How can a third party, someone who isn't even related to you, you don't control their hours. I mean, it's a true arm's length transaction. It could be a subcontractor, could be an independent contractor. How in the world can they create nexus for you? Well, unfortunately, the U.S. Supreme Court twice has come down on the side of the states and said yes. One was all the way back in 1960. It was the Scripto case. And, the state of Florida said, hey, these 10 independent contractors, create nexus. And Scripto said, you're out of your mind. How in the world can these people who don't even, work for us, how can they create this, connection with the state that, you're calling a significant nexus? And the U.S. Supreme Court said, hey, it's constitutionally insignificant as to what you're calling them. They're doing the same job. And then this is tested again in 1987 with Tyler Pipe. And, out of that case, we've got some really important language. The Supreme Court said, hey, it doesn't matter what you call them, doesn't matter how you pay them, doesn't matter if they represent you exclusively or if they represent multiple parties. It doesn't matter if they, do it on a full-time or a part-time basis. Here's what matters. Are they helping you to establish or maintain a marketplace? And if they're helping you to establish or maintain a marketplace, good chance that's going to be nexus creating. And the reason why that language is so important is because so many of the states took that language and incorporated it directly into their statutes, their rules, their guidelines. So very, very important, doesn't make common sense. So a lot of companies out there are unaware of this. Even a lot of, trusted advisors are not aware of this because, again, it just doesn't make common sense. But while the states are out there looking for this economic nexus, they're going to stumble across this third party nexus. And over the years, this has been probably the number one issue that I find that companies are most unaware of. So that's why I think this ranks up there as number one or number two as the worst type of nexus. The next one that I want to talk about is remote employees. Because of this COVID-19 pandemic and the closures, we had a lot of people working from home. Now, most of the states have come out and they've said, hey, while we have these forced closures and this forced working from home, while we're still in this crisis, we're going to suspend, our remote employee nexus creating, looking at that as a nexus creating activity. But some companies have decided that having employees work from home is a good thing. And they're giving their employees the option to stay working from home. And that could be an issue because most states, depending on what that employee is doing in some states, but some states like in Michigan or in Arizona say, hey, having an employee in the state for any reason is going to be nexus creating. So remote employees is a big one. Owning tangible personal property in a state is often overlooked. Whether it be inventory, a lot of FBA sellers say, hey, I didn't put the inventory in the state, so therefore it's, not creating nexus for me. But it doesn't say you have to put it there. What it says is owning tangible personal property in a state, and inventory is a tangible personal property. Some states go further and say having inventory in the state, whether it's, you put it there or whether it's consigned inventory, that is going to be nexus creating. If you're leasing, if you equipment or any type of property that you're leasing that's crossing a state line, you now own property in another state. So owning a tangible personal property in another state, big issue. And oh, by the way, just because Amazon's now collecting the tax for FBA sellers, if you're selling on more than one channel, if you're selling on Shopify, in addition to Amazon, Shopify is not a marketplace. You're responsible for collecting the tax on Shopify, and that inventory at an Amazon warehouse can still create nexus for you. Some states like Texas and Arizona have changed their thinking on that. And depending on, if it's being the inventory in an Amazon warehouse is being used to fulfill an Amazon sale versus, Amazon does fulfill sales for other channels. That'll give the answer as to whether it's nexus creating or not. And the states that have changed are Arizona and Texas. And then a virtual office. Last thing I want to talk on right here. So many people nowadays tell me, well, Mike, my business is in the cloud, and therefore I don't have a location anywhere. And unfortunately, the states just don't look at it that way. You yourself or your client is the one who is creating this link or connection. Anywhere you live or operate your business from, you're creating a link or connection with that state.
Yeah, Mike, we poll people about this in every webinar we have almost. What is the worst type of nexus? And just like you said, most common economic or third party, and lots of confusion surrounding that. So a very helpful frequently asked question. So the next one we have here is, do states care whether sales are taxable or exempt when analyzing economic nexus thresholds? Do they look at total sales or just taxable sales? And not for the last time, the answer is it depends.
See, it's not only my favorite answer. Now it's becoming your favorite answer too.
It will it will always be the most common answer. Sales tax and more. There's just so many variables when it comes to seemingly everything. But essentially, some states say total sales, including exempt sales. Other states say only taxable sales. Some states exclude sales for resale, but include exempt sales. Some states exclude marketplace sales, while others include them. So you may already be confused. That's okay. On our website, we actually have a free chart that details all of this. We have a lot of great feedback about it. It details what's included, what's excluded, as well as economic thresholds, their effective dates, and a lot of other useful information. So I would take a look at this. They're really continuously updating their information, and as they do, we keep the chart updated as well. So it's called economic thresholds, nexus thresholds, and I will link this in the show notes as well. You can also pretty easily find it on our website. So there you go.
All right, Ellie, and that is a great resource. When states first come out and announce their economic nexus, very little details. And, over time, more and more information is released. So like Ellie said, we're constantly updating that chart. So whether you want to figure out what your own economic nexus footprint is, or whether you are helping your clients figure out what their economic nexus footprint is, it's an invaluable tool. And by the way, there are a lot of software companies out there that now come up with these economic nexus software. And unfortunately, you usually just don't get as granular with that software. You get a lot of false positives, sometimes false negatives. So if you don't want to be out there, needlessly registering in states, I suggest, if you're going to use the software, that's just the first pass. Then you got to look at what's actually included in those thresholds, because you may not cross a threshold if you back out those things that are excluded. So software, great at a lot of things. Figuring out nexus, usually not one of those things. All right, so Mike, I just want to register for a resale certificate. Can you help us with that, or how do I do that? That's the next question. And generally, you can't. I mean, that's the quick and easy answer. Ellie, do you ever think I was going to give you a quick and easy answer?
No, no. But I'm sure you're going to expand on that a little bit. So,
Of course. So, you know, in most states, in the vast majority of states, the process for registering for a resale certificate is actually registering to collect and remit tax. So that's the process you go through. And as a result of being registered to collect and remit tax, you, in some states, get a pre-printed resale certificate, like in the state of Florida. In other states, you just download the certificate off the state website, or even doing a Google search, and then you write in your sales tax number. So that's how you register for a resale certificate. State of Illinois is the one major exception that I know of. And if you don't have any taxable sales in the state of Illinois and you're not required to collect and remit tax, then you actually can register for what we call a resale certificate. It's a little bit tricky. You got to be careful. You're not registering to collect the tax, but if you don't have a responsibility, this is something you may want to do if you have to issue a lot of resale certificates. Your vendors may be asking for it. You can give them exactly what they want and have no responsibility to collect tax. But Illinois is the exception rather than the rule. Now, this is often a little bit of a tangent, but once you're registered in your home state, which is where you generally want to start to register first, a lot of states accept home state certificates, or even if they don't accept a home state certificate, they may accept their own state certificate with your home state number. So we call that alternative documentation, but alternative documentation can only be issued if you don't have nexus in a state. If you do have nexus in a state, this linker connection we were talking about, then you have to be registered in order to issue a valid certificate. Alternative documentation is only okay if you don't have a responsibility to collect and remit tax. How's that for adding on to an answer?
Yeah, thank you so much, Mike. I think that's incredibly useful. And I'm going to jump right into the next question here. So do you need to register if you have economic nexus but have no taxable sales? So I think the first thing I need to do here is make some clarifications. If all of your sales are exempt, then you do need to make sure you are collecting a valid exemption certificate on all of your sales. When it comes to registration, some states do not require a company with 100%, and I mean 100% exempt sales to register. However, other states do require you to register and file a $0 return. So the risk is when you're not collecting a completely filled out exemption certificate on the correct form. However, in general, most of our clients, they don't register in this scenario unless there's a really specific reason to do so. Mike, I could have started this out by saying it depends, but I think those clarifications are very important.
Yeah, and speaking of clarifications, one thing I do want to say: most states, any penalty or interest is based upon the tax that is owed. So if all your sales are exempt, there's no tax that's owed. So, even if the state tells you to do something, to me, that's just a recommendation. I mean, there's no teeth there. If they come in and say, hey, you were supposed to be collecting tax, you say, oh, my bad. And there's no penalty or interest. There are a handful of states that, in addition to those normal penalties and interest, they've put in something along the lines of, if you were supposed to be filing a return and you didn't file a return, then there's a $50 penalty. So a lot of people get scared about that, and they say, well, we're going to do it. You got to remember that, if you're paying someone to do your returns, you still have to pay them, I don't know, $25, $50, whatever that per return fee is. So a lot of times it's a wash. So most of our clients, if they don't have taxable sales in the state, they're not going out and getting registered.
Yeah, thank you so much, Mike. We did it. We did the first 6 questions here. So please join us for the next episode. We'll do 8 more of our most frequently asked questions, and they're all incredibly useful. So if you have sales tax needs, we do offer a lot of solutions and services. You can just reach out to me directly if you have questions. My email is emoffat, EMOFFAT @salestaxandmore.com. We also have a lot of resources on our website, including the economic nexus threshold chart. Our website is salestaxandmore.com. And in addition to our services, we do have a series of free webinars. We have paid resources. We have a lot of really helpful information and services out there. So thank you, everyone. And yeah, thanks.
And I really want to thank everyone for joining us on today's episode. We'd like some feedback. Did you find this format, which is a little bit different than we've done, do you find it helpful? And would you like to see more of these sprinkled in? And also, we'd like to solicit some, ideas for topics that you'd like to see covered in the future, whether they be interviews with certain types of people that we work with, or whether they be more along this with frequently asked questions, with Ellie and I answering those questions. Please submit your feedback to us. Let us know what you would like to see or hear. And again, we hope to see you on the next episode, where we're going to cover the next 8 frequently asked questions. Thanks, everyone. Bye-bye.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.